certainly obviously pretty volatile times out there in the equity markets. We haven't even reached the month of October yet, which historically has normally been a very volatile month. Really the concerns are obviously the slowdown in China, the action there from the central bank to devalue the currency, and then obviously the impact on growth for not just for China but obviously for the global economy as well. All this has seen some pretty major sell-off, really starting in China with the market down between 5 and 8% almost on a daily basis now. We still got to remember that, overall for the last year though, the market is still up around 20-25%. Is it a correction at the moment? It is a pretty major correction, but is this entering a bear market? It'll be interesting to see how that pans out going forward over the next 3 to 4 months. Again, how has that filtered through into the rest of the global equity markets? Obviously, the US market has come under severe pressure, but historically, if you look at it, when the S&P has fallen by more than 5%, and it really fell by 5% in a couple of days last week. Again, historically, the following week it's been slightly up, and over the next 4 weeks it's been up around 3 to 4%. There's been about 28 occurrences of this since 1980. And if you go to our Facebook page, you can see a pretty interesting article from Bloomberg on this. And really is quite interesting looking at historical data and see what happens as the market does into these correction phases. Interesting to note as well that certainly a lot of corporate executives within the S&P 500 countries, they've actually been buying their stock. Now again, that should be seen as a pretty fair indicator. Maybe not short term because they can't really pick the bottom of the market, but medium to long term, they've got pretty good faith in the prospects of the company, and they view that any dips there are good buying opportunities for their stock. Obviously, this has some pretty major implications for the Fed. Most analysts now predicting that the US Federal Reserve will not increase rates now in September, but will still look to increase rates by the year end. As the artificially low rates that currently in the US really are unsustainable. But also as well, it gives the Fed a little bit of ammunition as well, that if things do start to slow down a little bit in the future, they've got some ammunition. Because if you've got rates that are pretty close to zero, you've got no prospects of cutting them. Here in New Zealand, you've got a similar scenario where most analysts now expect a further cut from the Reserve Bank in September. That will take rates down to probably 275, and it would then just be interesting to see how that pans out with the falling currency and the cuts we've already seen, to how that impacts on growth. Will be interesting as well at the next dairy auction after the previous previous price increase up around 14%. Futures again are predicting a little bit of an increase in the next dairy auction as well. So that will be filtered into the Reserve Bank's thinking. Obviously here in New Zealand, when you've had eight to nine consecutive down options, you're now starting to see possibly a couple of up prices. So it will just be interesting to see how that filters through into their thinking. As commented before, it's a pretty good time for issuers, and you've got Contact and SkyCity with bonds in the marketplace about to be issued around 6 and 7 year duration. Interest rate, indicative indication rates at the moment are around that 440 for that level. Now, if you are interested in those, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz. And finally, just when you thought Greece was all sort of settled, they certainly got the bailout package they wanted. The Prime Minister has now resigned and called another snap general election. And it'll just be very interesting to see how that sort of pans out. That his party is sort of pretty much disintegrated after he accepted the bailout package, which was really what he was he was elected on, the anti-austerity packages, and now sort of 6 to 9 months down the road, he's accepting exactly what he said he wouldn't do when he was elected.